Shut up and sit down.
What is going on, everybody? Episode 58 of the Rebel Trading Group podcast. My name is the gluten-free Jason Besson. It is currently Thursday, January 10th, 2019, baby. It is Thursday. It's currently 1:38 p.m. Eastern Standard Time, which means the stock market is open right now. Let me start with a Happy New Year. And we're back into the grind now. We're going to start putting out some content. We got a lot of fun, exciting things lined up for the next year and going forward. So we really hope to grow and expand this as much as possible. We really are going to strive to build that community. And most of all, we want more followers. We want more people with us. We want more discussion, more content, more money. So it's going to be a fun year, guys. 2019. We're going to leave that ugly 2018 in the past, and we're going to focus on the fresh start here. So since the markets are open, that means that we're able to get you some numbers. I'm going to start with the loser right now, down 10%, and that's Bitcoin. She was hanging out around the 4,000 range, and now she is down exactly $400. Chilling at $3,600 per Bitcoin. Crypto's taking it harder, or altcoins taking it harder. The Dow Jones is currently down 47 points. S&P is down 7. I'm going to call that 8 points. And then the NASDAQ down 26. Oil had a tremendous run up yesterday, but it's only down about 9 cents. About 9 cents a barrel. And then we have gold hanging out at $1,287 an ounce, down $4. So sell off everywhere, which is odd, especially with gold when everything is down, including oil, and then gold's down on top of it. There must be some fuckery going on, but it's okay. We've had a beautiful year so far. We've put in a nice, quick U-turn. Nice perfect V shape on the chart. After the sell-off and sell-off and sell-off on New Year's Eve and Christmas Eve and all these ugly days that we had, and we had a tremendous 2019 with 5 straight green days in a row. But that means that we're about to have some red. You know, all good things must come to an end. Santa Claus rally came a little bit late, but did not rally hard enough for us. So what exactly is going on? Well, I did an episode about it last time. We have a lot of just uncertainty going on. The only certainty in the stock market is uncertainty. There's just all kinds of variables being thrown left and right in this market, and if you are late to the game and live under a rock, don't worry. Go to our last podcast where I talk about what the fuck is going on. So, what is exactly happening? Well, we had that massive sell-off, and then we kind of went flat for a few days, and then we decided to just rally as soon as the New Year bells were ringing. We just decided, we're going to go up from here. We still have a lot of work to do. We're still down all across the major indexes. I think we've only recovered about 4 or 5% of the 20% of the, about 15% that sold off altogether. So we still have some work to do. But, of course, it creates excitement out there. It's like, oh, all this red, and I'm losing all this money, and all of a sudden, hey, a couple green days. Hey, guys, everything's not so bad. Well, the Dow Jones is, the Dow ETF hit, what's the 52-week high there? 269.28, and right now it's at 238. So, man, we got some work to do. Still down 4% on the year. Past 3 months, we're still down 6%. We were down more. We were down 13. We covered out about half, but I'll say it one more time. We got some work to do out there. So what can we do? Well, you kind of missed the train to buy, unfortunately. The buying train was, not maybe December 21st through the end of the year. That was the time to be loading up. We came on here, we said it is the time to load up on equities. It's time to start building up some of your favorite core holdings, buy some of those stocks, those good dividend payers. Well, now that we've rallied and everything's up 7-8%, things just got a little bit more expensive. So you missed the train to buy. Do you want to short it? I don't know. There's a lot of things that can bring it right back down. If I'm not mistaken, I think the government's still shut down. Nobody's really talking about that. Trump is currently having trade talks with China. That could go to shit. The EU and the whole Brexit thing can go to shit. That's coming up in March after being postponed. So there's a lot of shitty variables out there. So do we want to short this market? Not really. Because if the Fed holds off on rates, that's going to be healthy. And your shorts are going to get eaten real quick by the bulls. If you're going to short, I told Nathan this yesterday, if you're going to short, I would do it more so as an insurance perspective at this point. Protect some of the downside. Don't try to capture downside. Let's protect the downside. Set up yourself maybe one put option, just here and there, maybe a SPY out of the money put option, just in case we drop again. You're going to get a little bit of something. But don't go short thinking that we're just going to we're going to continue that downtrend that we had, Approach with caution. At this level, currently where we are right now, Rebel Trading Group, I say don't do a fucking thing. I say wait it out. Let's see if we start to go up, maybe buy into the strength. But for right now, I'd give it probably through the end of the week to really kind of decide what it wants to do. If we have another great up day tomorrow and close out the week on a strong green candle, then maybe consider buying on Monday on the open. But I think you're too late to short, and I also think you're too late to go long. I think we need to stick around. Now, if you think something can go short and can go long at the same time, one of the best things you can do is what's called a straddle. And that's going to bring us to today's market terminology, the straddle. What is a straddle? Well, it's an option strategy. It is an option in which it's actually it's considered one trade, but you trade two options together. You buy one put and at the same strike price, you buy the call. And basically, what you're looking for is a rapid move up or down. Basically, you just don't want the stock to stick around where it's at. That way, if your call option goes up and makes a lot of money, you'll lose money on your put, and vice versa. If the stock crashes and goes down, you'll lose money on the call, but you'll capture a lot of upside from the put. So it will offset your gains. That is the disadvantage. It caps some of your gains and it will eat into your potential profits. But it takes a lot of the guesswork out. If you just say, hey, I don't think we're going to stay at these prices very long. I think we're either going to rock it up or rock it down. It's a good way to put on a straddle. It's a good way to capture just anything. You're basically just playing volatility at that point. And I like straddle options strategies because it doesn't try to guess the market. I don't like directional trades. So, very simply, buy a call, and at the same price, buy a put. Same price, same expiration. And it's just a way to buy volatility. The biggest thing working against you on a straddle option is time decay. If the price doesn't move, you're going to lose a lot of money quickly because that time premium is going to shed off of your options contracts. So you need movement, and you need it rather quickly. So to walk through maybe a potential trade right now, I'm going to go ahead and pull up the Dow just because I have it here. Let's look at some Dow Jones options. And let's just say I don't think we're going to stay at 238. But to be honest, I'm not going to put my money where my mouth is. So I will not be executing this trade. But here's something I would do in this potential market had I felt that I wanted to take a more aggressive position. I would start by looking around the March 1st contracts just to give us a full month and a half of trading time. That'll also put us in the midst of earnings season. So what you're going to do is we're at $238 per share. So I'm going to go for the 239 strike price. And we're going to buy one call at the 239. We're going to add that to our cart. And then we're also going to buy one put at $239. Let's add that to the cart. So the call is $6.30 premium, and the put is a $6.98 premium for a total of $13.30. So this trade would cost us $1,330. That's our cost to put on this trade. Now our goal is for one of those to go down, and one of those contracts to go completely worthless, and the other one would have to double in order to make up the profits lost, or the money invested to make up that, and then to cut into some profits. So you need rapid movement really quickly. Is one of the reasons why I don't like this straddle, is because while on paper it sounds good, well, just buy the 239 call and put. Well, really, you probably need about the price to move to either 232 or 246 in order to profit off of this. So you would need a more violent move. You don't just need it away from the 239 price, you need it well away from that. And that's one of the reasons why I don't do this strategy. I've got burned on the time premium before. I'm going to call him out. Nathan has too. When we both got into straddles together, and we were just like, oh, straddle everything on earnings, straddle everything that's triple leveraged. And, sometimes it works. But I'll be honest, it doesn't work all the time. And it's those times where it doesn't work that really humbles you, and it really crushes you. So that's straddle. So that is a potential move you can make in this market if you're looking to play it. But if you want the textbook answer, or maybe even the Jason Bessing answer, I would say don't do anything. Just be patient. Just be patient in this market. Let things calm down. Let's see where we go. Don't get greedy. Not quite yet. The time to get greedy has passed. It's now time to watch from the sidelines. It's my personal opinion. So, if you have any questions, comments, concerns, suggestions, insults, ideas, whatever, about straddles, or even the fact that you might be a little bit too late at this current week, email us, rebeltradinggroup@gmail.com. Email us. I am going to say it. If you want to actually be on the show, email us. We would love to have you. We want to talk strategies. We would like to talk history, the winners, the losers, the smiles, the laughs, the tears. Email us, and then we'll send you a little questionnaire to fill out, basically just to find out a little bit about you. And we'd love to have you on, whether you've been trading for 3 days, whether you've never traded and maybe you want to get into it, or whether you've been trading for 40 years and you hate us and you want to insult us. That would be great. Let us know. We would love that. I'd love to be told off on everything that I'm wrong on. So, yeah, email us, Rebel Trading Group with 2 G's at gmail.com. I didn't really have much of a topic prepared today because I am running this solo. I really wanted to talk, and I think I'm doing so good so far, so I'm going to keep the ball rolling. We've been talking about the Dow already. So what I actually want to talk about, me and Nathan often discuss that the Dow Fuggin Jones, if you will, is our favorite index. Why? Why is that our favorite index to trade, own, lock away in the portfolio, all that good stuff? Why that one specifically? Because most fund managers and mutual funds wouldn't exactly be as Dow heavy as they would be NASDAQ or S&P heavy. So I kind of want to break that down. So the first thing I'm going to do is I'm going to pop on over to Market Watch. Market Watch has a section, I call it the Dow Watch, but you just go over to Index, Dow Jones Industrial Average, and it will tell you not only what's going on with the Dow Jones, but it will tell you each individual company and how it is currently weighing on the Dow Jones during that trading session. For example, right now it says that Boeing, Caterpillar, and Travelers are the three leading stocks in the Dow. Boeing up 1.7%, Caterpillar up 0.5%, Travelers up 0.5%. The biggest loser on the Dow right now is Pfizer at minus 2.64% on the day. And there's a lot more red there than there is green, and that's why the Dow Jones is being pulled down. Apple at 152. Yikes. Yikes. So, why is the Dow our favorite? At least, why is it my favorite index? First of all, it's only 30 companies, so it's not quite as diverse as the S&P. There's no real estate and there's no utilities in the Dow Jones. And those were two of the highest performing sectors last year. And they're not in the Dow Jones. So, precious metals are not in the Dow Jones. There's no mining companies. Is there even a restaurant? I don't even think there's a restaurant in here. I can never remember. I know it's only 30 companies. McDonald's is the only restaurant here. And then you got Coca-Cola as well. So, there's the staples, I guess. There's not really much discretionary in there. If you notice, Apple is in the Dow, but Facebook is not. Google is not. Amazon is not. Why? Because their valuations are fucking ridiculous. And I don't like the influence that they have on the S&P 500. I don't care about the NASDAQ, to be honest. It's a tech-heavy sector, so it's whatever. But as far as when it comes to value investing, I don't really want much to do with them. I like the big blue chip, the mega cap companies. And that's all the Dow Jones is. The S&P has some large and mid cap stocks in there as well. So I like the sheer size of the companies in there. I like the valuations of the company. Also, the Dow Jones, all these companies are so well established. Everybody has heard of every single one of these companies here. Chevron, you go there to get gas. People swipe their Visa 5-10 times a day. Everyone knows who Disney and Apple are. Walmart, IBM Computers. Do I need to go on? Boeing. We know who these people are. Dow DuPont, if you know who Jeff Gordon is, it's a chemical company. Like Johnson & Johnson, they have that in your bathroom. You know who these companies are. And that's another one of the reasons why I like the Dow Jones. If there's something that's going on with one of these companies, I can probably off the top of my head kind of guess, okay, yeah, I can kind of see how this is going this, or how this is going to hurt this, or blah, 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 blah. I get these companies. I kind of get what they do. We use them on a daily basis. On top of that, the Dow Jones ETF, DIA, is the symbol. The Dow Jones Industrial Average. It's the one that attempts to mimic the exact price of the Dow. And that one pays a monthly dividend. And as the value investor on the show, I like to have dividends paid to me. I like the cash flows. I like the buy and hold. And the Dow Jones ETF pays a monthly dividend near 2% a year. Don't mind that at all. And number 3, it tends to be more volatile than the S&P 500. The S&P 500 is a little bit slower, in my opinion. The Dow Jones tends to go higher. We always say, hey, we're going to open up 300 points. We're talking about the Dow. Dow's down 200 points. There seems to be bigger swings because it's less stock, so it's more volatile. And that's one of the reasons I like the Dow. And I still think you have the safety and stability of diversification, and the Dow Jones, those 30 companies make up 20% of the U.S. economy. I'm sorry, the U.S. stock market. 20% influence is the Dow Jones. 80% is the S&P. Russell 2000's like the 92%. It's really just mind-boggling the numbers that the companies within the Dow put up each and every year. Trillions of dollars in revenue. Trillions. It's disgusting. And they all have a global impact. Caterpillar, Goldman Sachs, Government Sachs, they're in there. So, that's just my opinion. Like I said, once again, I'm going to hit you with the email questions. Rebel Trading Group with 2Gs at Rebel Trading Group. I think that's going to be it for today. I don't really have much else to talk about. Happy New Year's. I definitely wanted to get some content out there. If you want to be on the show, hit us up and get at us. We are at iTunes. We are SoundCloud, YouTube, Facebook. Come find us. Talk to us. Join us. Let's go out. Let's take a piece of that pie each and every day. Work closer to financial freedom. And let's share some profitable trade ideas. That being said, I don't have any trade ideas for you this week because I said it earlier. I think this is a good time to just chill. Let your cash chill, let your stocks chill, let them work for you. Let's just take a breather, okay? Everyone calm down. Let's see where this market goes. We'll check back next week. Something's going to be on sale, I promise. We'll make a trade then. Until then, may the volatility gods be ever in your favor. I love you all. Thanks for listening.
Romantic, isn't it? Shut up and sit down.